Hi, this is Guy on the 8th of June 2024. Let's go straight into the dashboard. I'm going to show you some good fun things in the platform in just a few moments as well. But let's look at market timing and see if we can get something from there. As we look at it, the obvious thing we see is quite a lot of red in there, but the indices have actually crept up. So we had that big momentum day last Friday, and that has resulted in the three of the main indices having a good week in that one, the S&P, Dow, and Nasdaq. So that was pretty expected. In terms of the long-term market timer, we're still full green, but that is a longer-term indicator. So you've got to be, you want the planets to align somewhat. What we also see here is that the consolidations pie is quite fat. So there's quite a few of them. But the question, as always, is what kind of quality are those consolidations? Are they overextended? What kind of situations are they neat and tidy? Generally they are, because the algorithm insists, but we want to see the quality, not just the quantitative piece of that. In terms of those consolidations, what you will find out of these, because out of 85 in the top 1,000, 48 are showing after a bearish kind of flagpole, if you like, but that can be this instead. It can be a pullback and then may pull back up afterwards. So don't just take things at face value. If we look at the two pies that we like to look at for a potential mean reversion, well, they're showing small, so it's very unlikely to be a mean reversion. These are stocks that have passed above or below a certain OVI moving average threshold. What we're looking for is extremes. We're not getting an extreme on the green or the red there, so I think we can pass that one by. And then we also look for the same for a subset of that one, where stocks have not only passed upwards or downwards through those OVI thresholds, but also passed upwards and downwards through a 200-day moving average as well. And that is by no means at any extreme either. So there's no mean reverting kind of scenario there for us in terms of market timing. Not much else to say in terms of the dashboard today. If we go to the market timer area, where we look at the short term and medium term, what I like to look at a lot is the medium term one, and we're still very much in the bullish zone and we're not overbought at this moment in time. So that would suggest there's probably some more upside, but I would caveat that to say this, and that is we are a little extended from that 50. Of course, it could go a little bit further, but at some point we will pull back to it, like we did last week just there as well. So just be aware of that one. OVI is, well, moderately positive, moderately positive to neutral in that one. Nothing more in terms of detail I want to get into there for the time being. At the moment, we're not particularly overbought, but we are a bit extended. And in terms of the medium-term timer, we're certainly not. We're in the sort of reasonable bullish zone. And if you look at the vast majority of time when we're in this bullish area, neither being overbought nor oversold, when we're in that phase, in that zone there, generally it does an excellent job. So that's where we are right now. Now, I'm going to go into the charts in just a moment. One of the things that I have done, and we've had some feedback on this one recently, is that people are really enjoying the J time poor filters, which of course you can access now by the binoculars inside the chart. Now, that's the good news, and I've gone through all of J's this weekend as well. There's a few of them there for us. Here's what I'm going to show you, though, right now. If we go here, I didn't load it up. I'm going to go into the development platform because I want to show you what's happening very, very soon, probably within 2 weeks or so. So I thought I had loaded this one up already, so let's just let it load on the development server. Okay, here it is loading up, and what you'll see is a slight difference in terms of how things look, and it's very, very cool. It's just show you then, it's taking a bit of its time. The development server is a little bit slower than the other one, especially on the first load. Let's let it happen. Okay, here we go. Now, what you're going to see here is this. You see these buttons here, just to show you. So this whole area is changing. Let's just get my pen working there. This whole area and there is changing, and it's really, really, really cool. Let's just get you onto another list here. Let's just do this sort of green star list. Okay, Now, to shrink the menu, it's just this little hamburger that everyone's used to, but notice how all the buttons stay in the same place. This is personal watch lists. This would be the expert watch lists. House watch lists, we're going to merge into the expert watch list soon. And then this is the trade finder. And what happens with the trade finder, there's a little bit of rejigging to do on this one, but what happens with the trade finder, I'll just show you something very, very cool. You click on which trade finder you want, and you can do a new search. And the new search appears like that, inside your chart. How fun is that? So you can control the whole thing without having to go to another tab. Everything is controlled here. And of course, you've got your pro fast filters, that's our fast filters, but you've also got your own personal fast filters that you can have as well. So it's all controlled in this area here, which is going to be super cool. And also, not only that, but you can then edit a particular fast filter set that you've got. So here's one I've clicked on there, and I can edit it there, and then resave it or save it as another one. You're going to be able to do that with my fast filters as well. So I'm going to allow you to edit mine, but then save them into your personal watch list as well. Notice all the time these buttons have stayed the same regardless. That's just a good protocol in terms of programming. So that's going to be really cool, a bit more efficient, which is cool. And also what you'll see here is above, you'll see the name of the watch list and the criterion that you've expressed in them as well. And if you want to look at the table view, you just click on table view and you'll be able to, you just flick that, and that's pretty cool too. So you'll be able to do that. And we will bring those filters, I know a lot of you want those filters right over here. We'll bring those there so it's nice and visible for you too. So you've got that little toggle for the list view versus table view. So that's what's going to happen literally in the next couple of weeks or so. And so everything apart from market timers is now inside the charts, which is fantastic. And of course you can open as many of them as you like. And the idea is that we will also bring market timing within those. But the next job after that is to get into the journal situation, get that working from the charts, and then after that, we will be able to do the broker links as well. So that's pretty cool. So if you are in VIP areas, do just go onto the trade finder, just click on stocks VIP or options VIP, and just type in the word J, and you'll find all of J's time poor fast filters. They're very, very popular. So, and we'll do a webinar with Jay imminently as well. So that's pretty cool. Let's go into these charts now. My list for this week that we can look at, my big list. If you have access, you can also see this small list if you have VIP. Okay, so here's the S&P. It's a much nicer chart here. It's much deeper. What I will do is I'll just add in the implied volatility there as well, so we can just see what's going on there. But S&P kind of reaching for new highs, just had a little bit of a fail on Friday. It wouldn't be surprised if it was going to do some kind of pullback of sorts, but it's not particularly overbought at this level either. It's just a tiny bit stretched. Not optimal to buy at this point. I'd rather buy when it's nearer those key levels. If you look at the Qs, similar story. Let's have a look at those. Not dissimilar there. Pulled back into its 50 there week before last, and then just pushed on above and okay there. OVI is pretty okay on the Qs as well. Obviously, you can see very quickly that it's the top stocks that are pushing these indices, and particularly tech, driving the markets at this moment in time. Let's now go and look at the Dow and then the IWM as well. So the Dow is the top 30 stocks, and let's have a look at what that's doing. That's just pulling back above its 50. OVI has been pretty decent actually, and maybe that will settle in and start to rise again in due course. And then we look at the IWM, that's the mid-cap 2000. So that's stocks, it's the first, so it's stocks 1001 up to 2,999, I guess, something like that. And you see that one's just dipped a little bit below. And look, the OVI is quite negative on that. Now, typically, that's a pretty good sign for the IWM. And I think I see the hint of shrinking retracements in there as well. So I think the mid-caps are under some pressure myself. And I think I quite like that for some downward movement, particularly if the other indices aren't particularly strong, if they're not. If you have a look at gold right now, that took a hit. somewhat surprisingly, that took a hit there on Friday, and so I would leave that one alone for the time being. So that's, again, as I said in the narrative that comes with this, it's a bit of a mixed bag of a market this week, and a lot of the drive from the major indices were coming from big stocks. Let's have a look at one of them right now. Let's go to Apple. That's obviously very extended. It is overbought, but of course this is where we know people were buying before. That's the place to buy. Post earnings there, and then you're looking at that. Notwithstanding that nasty little bar there, which could have knocked you out, that is true. But notwithstanding that, that's where you want to be buying. Let's go to these other ones now. We've got Abbott in there. The reason I've put Abbott in there is because it's got a sharp momentum day there, and that often should do something positive, consolidate, and then maybe do something there. So that's why that got in there. Then ACM, let's have a look at this one. Consolidating, there's your pattern recognition there with negative OVI. This volume bar here, I know it's a positive volume bar, but you know, come on, it didn't do that much. And a drop below this level should be pretty good to go. I look at this and I see shrinking retracements as well, so I think that is good to go for the way down. I think it's got a good chance of going down. Advanced Micro, this has been something that looks like it wants to go up. Obviously, it's involved with AI and all those kind of, you know, tech and chips, that sort of stuff. So really, it looks like it wants to. It's just hovering around this level above its 50. At least it is, you know, holding that 50, and we would hope to have some follow through in due course. Amazon up again, just above its 50. Again, the investors sort of feeling that that's, you know, not much volume, I will say there. Volume's actually been creeping down, but price-wise, recovering well. If you look at the last few days, this as well as 5 of the other top 7 were up, and that's what's been driving the markets as well. They obviously have high weightings in those indices. APD, this is one thing that we liked last week, and why? Because of that. And look at that. That's been the situation there. And if you are an options trader there, look at the implied vol, very, very low. So that was a good move there, and it's exactly what you want to be doing. Look, you've got shrinking retracements there and there, above a key level. This is good stuff. This is bread and butter. This is the sort of thing you should be looking at without anything. And look at also the implied vols, nice and low. So these are the ones we want to be looking at. Nice, neat, tidy, and easy. This is not nice, neat, and tidy, and easy. This has become quite a bit of a mess in here as well. So that one's a dud, unfortunately. It looked like it wanted to go, did 2 false breakouts, and then decided. And it may even go eventually, but it's just literally flaky at this moment in time. ARC, that had a good week, pulled up by the other tech sector. But yeah, what do we really think about it? I don't know what to think, but I would only buy this if I felt that the entire sector was going to be moving up pretty nicely. I think there's shrinking retracements in there, and I think that presents something of a wobble in there. BE is next, Bloom Energy. The reason I put this in here is because that's the time where you want to be interested in this, not up here, and of course that's the behavior since it was overbought, getting ragged. And that's a lot of the market got a bit ragged and more difficult to trade. Here's Caterpillar, not looking particularly good. That seems to be forming some kind of consolidation with negative OVI. Should, you know, come down to its 200. I think also there's shrinking retracements in here as well. I think that's weak. Maybe one more pull there to come down as well. But again, it doesn't look particularly strong at this point in time. Nor does CBOE. Let's have a look at that one. CBOE looking a little bit sorry for itself as well. And again, you can see here the kind of shrinking retracement type of scenarios. Here's negative OVI, and here we are beginning to drop down from that 200. CC, this is Chemours. We were bearish on this one, and we were right to be bearish on this one. Dropped down from here. It's pretty good, isn't it? I mean, you look at where we were bearish from, and down it's gone, because it was easy to do that. It was an easy one. Now, interesting one. A couple of these ones, these are the cruise liners. Now, is there something here? Well, there is a bit of shrinking retracement stuff about this, isn't it? OBI is there, and these things can move. And the OBI, the implied vol is not even that bad on this one. So anyway, I can't ignore that. That looks interesting. I'll show you another one later. I think Royal Caribbean, Norwegian, I'll show you later. This is a logistics company. We liked it, but it said it was a bit bumpy, it's a little bit extended. So I would just ignore that one for now. Chewy had a good few days. This was earnings, not this past week, but the week before, but it hasn't settled down for us. It's continued to go up, and it is vulnerable to a pullback now. Coherent looked good, did well. That's the situation there. That's what happened. We liked it, and we've liked it as early on as the 25th of May, so back in here, and that's been the result, been a pretty decent result there for Coherent. Now this is ConocoPhillips. They are buying Marathon Oil, and that one, therefore, I would not choose to go into that one right now, so just ignore it. Then you got CVS. This one's interesting. This one's an implied vol bullish divergence. Something's going on here. Things look a little bit better. I would rather it consolidated. Even better if it could do so above that 50-day as well, just for real clarity there. And we want real clarity. Just because I go through these stocks with you doesn't mean they're buys or sells. It just means they're interesting or there's a learning situation, some of which are either bored, oversold, or not quite right for various reasons, and some that look interesting. Now this is Datadog. It's got a full house of bearish big money footprints, including consolidation and shrinking retracements. So you can see the consolidation pretty easily, and the shrinking retracements, well, I'd be interested to see which ones they're taking, but that is their negative OBI, lots of selling. I think this one does look like there's some downside for it there under that key level. Then Dollar General. This is interesting as well, because again, some of these other discount stores look quite good at the moment, but not this one. And this one's got that big negative bar there, which should be the prelude to more downside action, particularly now it's got negative OBI, big selling action, and now it's gone down through the key level as well. So I would expect more downside action to that one. DJT, obviously Trump, this one's holding up pretty well, and now it has 50 days. There's your 50-day key level in there as well. I'd hold off on doing anything on that one, though, for now. EA, this one was beginning to look good. It was pulling back, and it has responded pretty well on that one. Good, nice, fat OBI in that one, too. That's good. Estee Lauder, not doing so well. Again, these are ones I've talked about for quite some time. We talked about this one way back at the beginning of May. So we had this bar, and we then pulled back into that. So that's kind of interesting to see how that's gone. But I would leave it alone. It's a bit extended right now. Enphase, did it follow First Solar? Well, it did for a while, but in a kind of messy way. And then Friday, not so good. So that's just something there. Now, let's look at Franco-Nevada, obviously gold miners stock. Let's have a look at that one. Looked like it was pulling back in order to go back up again, but as gold you saw earlier had a bad day on Friday, so did this one. And so if you look at that choppiness in here, that's really difficult to take. That's really very difficult to manage. You got a down day, then 2 up days, then a big down day. Difficult. So it's a big fat ignore on that one when things behave like that. First Solar's still overbought. It's holding up really well, but do you really want to buy in there? I mean, if you want to look at it from the point of view of where would you? Well, of course, here, just after earnings. And in fact, we have this little tool here, and we'll follow it up with filters for how far away a stock is from its key levels in terms of its average true range. So if we click on the ATR band here, I'm going to just get rid of the upper bar, and I'm going to put the lower bar on like 3 ATRs from the low of the bar, and then just click save, and then you'll see this is 3 ATRs below the stock. So how many ATRs is it already above that that 50-day key level? It must be about 5. So it's a long, long way away. Would you really want to buy there, or would you rather buy here? So in here, it was still 3. It's quite a long way away, actually, wasn't it? But it was still better than up here. That's like way too far away. in terms of, do you really want to push up from there, or do you just want to hang in there? Do you want to wait for a more opportune situation? Now, many of you have already seen that when you buy closer to those key levels, it just generally works out better. Now, of course, there are always going to be exceptions, and sometimes those exceptions are going to be very profound, but you want to be going with the tide. You want to be going with the majority play on these ones. So typically, we don't like to buy overextended, overbought stocks. GDS is next. Let's have a look at that one. This one, again, pulled back. I'm just trying to think why I've got this. It's probably because it's a shrinking retracement there, there, and there. And we just need it to kind of consolidate there a bit. But it's quite a it's quite a big thing there. Now, let me have a look, see if there's anything else I can say about that. Maybe, maybe not. I don't think there's much I can say about that one. So we'll move on quickly from that. There was a reason I had it, but maybe it's shrinking retracements was it. GE Healthcare, this is interesting as well. This, I think, has got shrinking retracements again, but bearish, and I think this is interesting. Goes below 75, I think that one could drop. GH is next, Guardian Health. Good, we had it last couple of weeks. We said bullish, we liked it from here, obviously post earnings and in here. Very messy though. So yeah, we're right on direction, but is it really an easy trade to make? No, but at least we got the direction right, which we do, I think a good 8 out of 10 times anyway. This is Google, overextended. It still looks good, but it's just not for me at this point, but it is one of the top big 7, so I just will keep on showing you that every day. Home Depot and the other home improvements stocks not doing very well, and this looks like if it drops below these levels, there could be some downside there as well. I think, again, there's the sort of whiff of shrinking retracements in here as well. Kind of got that classic head and shoulders kind of situation, which isn't a head and shoulders, it is shrinking retracements, and I think that's kind of interesting. This is Hartford Financial, just digging in there as well, but it's got shrinking retracements to the downside. Look, 1 and 2, and if it drops below 100 and, well, a little bit less than 100, I think there is real danger of some downside there. It's running out of buyers at this point in time, but you need confirmation of it. With everything, we always need confirmation. This is Keysight Technologies dropping down. Obviously, we had it from the last couple of weeks as well. There's your sell-off bar at earnings, and here's your post-earnings drift, as we suggested, then below the key level. Kratos is a defense stock. We liked it, but we said it was overbought. There's your reversal. And even with a nice OVI, this just needs to retrace a bit. Volume low on it. So, it's not retracing because people are just getting, waving for the exits. It's just because they've just run out of steam for the while. There are not many buyers around. Lockheed Martin is misbehaving as well. It dumped, then it came back. It's then done a false breakout. It's just very difficult and messy. So while I suspect that there is upside on this one, do I want that one? No, it's not tidy enough for me. So think about tidiness as well. Lowe's, this is another home improvement stock. And again, it looks a little bit fragile, doesn't it? And I think, again, you see that shrinking retracements and the potential waterfall. OVI's recovered somewhat, so we need a break of this low. We've got that support there. We need to break down below it for that to happen. Now, one stubborn stock here is Lightspeed. It's just hanging in there above the 50, but below the 200. OVI is good. I mean, it's pretty much there. It's ready to go one way or another. There's your shrinking retracements, bullish. Just hasn't got going yet, so we'll leave it alone until it gets above that 200 and then confirms. Macy's, I have a very soft spot for Macy's, always good deals there, but not doing well now. That's a negative OVI, consolidating below a key level with shrinking retracements, negative, bearish ones, and I think this one has to look like it's got some downside. Meta, Facebook, whatever they want to call themselves, that's looking pretty good. I think looks pretty good. The Meta Quest AI or virtual reality machine apparently is insanely good, and it's priced at 7 times less than Apple's Vision Pro, which is really interesting. The Apple's Vision Pro is very heavy as well, so I think they're getting the technology right in this one, and that's pretty interesting. Lots of practical uses for it. This is Middleby. Middle B, still haven't fixed that icon yet, but Middle B we were bearish on. If we go back to the 18th of May or thereabouts, so we're bearish, that was right, and it looks like there's still more bearishness to come there. Monster is an interesting one. There's a little note I have on this one, so again, use your notes on this one. There's the journal viewer. Dutch auction, read the founders. So basically the founders are putting up some of their shares to sale. It's really interesting when you read it, look at the news, click on my news tab, and you'll just look at this this article here. You can click on the article and see what's actually been going on. It's a slightly unusual situation. And when you dig into it, it's not actually as, you know, it's not a bad scenario. It's not like, you know, it's not like, you know, insiders getting rid of it or selling for bad reasons. It's just sort of some family planning type of stuff, it looks like. So I think this one will probably form an opportunity in due course on that one. Remember, if you want to edit at the moment, if you want to edit your journal, you would go to the left-hand side where you can edit these as well. You can view them and edit them, and you can actually just filter for them as well, which is pretty cool, but we're going to consolidate all of that into just one button on the right-hand side in due course, just separate apps. So just be aware of that one. I think not all is quite as it seems with Monster. You see this ramping up of volume in there as well, taking advantage of the shares that are for sale. So I think there's a slightly different story there than what it might look like. So it's always worth having a little, you know, look, especially if you like the look of a stock one way or another. This is Merck. I think Merck has got potential for more upside. Is it AAA? I wouldn't say AAA. Marvel Technology, this looks like potential for downside. The reason I say that is because you get that nice sell-off bar. Then you've got a little bit of a consolidation here. And I think there could be some OVI help in there as well. And I actually think, too, there is this sort of shrinking retracement type of thing in there. It's not clear-cut. That's why it hasn't shown up. But I think that looks weak. And typically, when you get a bar like this, you do get some downside afterwards. Morgan Stanley, let's have a look at that one. Pulling back into its 50-day key level. I think it's almost ready to start to go back up. It's showing as a bear flag, but clearly that's not a bearish bear flag, is it? So again, that was what I was saying to you earlier at the very beginning of the broadcast. Then there's Microsoft, another big one here, looking okay, bouncing back, and again, had a strong week here, and that's one of the reasons why the indices are okay. OVI is a little bit iffy on this one for the time being. So I wouldn't be chasing that one at this moment in time. Match.com, though, I quite liked the look of last week, and it's performed well. So you see that I put it out last week, and this has been the reaction. Pretty good, huh? I think that's pretty decent there. Almost 10, about 8% up on the week. Then you got Matador. This one too, big sell-off bar here, and now we're below a key level with the negative OVI, shrinking retracements bearish. It doesn't look particularly good. And it's kind of interesting because what I do sometimes, I say, well, okay, it might not go down, but could it be, you know, going up? Oh, sorry, it might not go down, but will it go up? Unlikely. So with this and a few others, I've looked at doing what's called a bear call spread. And a bear call spread says, well, look, can I find short-term options, you know, less than 2 months to expiration, maybe even less, and can I set it so that provided it stays below the lower level of those strikes, and there'll be a little break even slightly below that. Could I do one so that so long as it doesn't get above that, I make some money? And of course, that's a really cool strategy with something like this. Is it likely in the next short term that this is going to get above 64? I would say not likely. And if you do it with a stock that doesn't get affected by news, which is not this one, because this is oil and gas, then it's even more powerful to just pick up a bit of income potentially for that. In this particular case and others, you know, I have found one or two difficulties in getting the right kind of, you know, liquidity out there. That's another way of trading, is to say, okay, could I make money if it just doesn't do something? In this case, if it doesn't go up. Now, we mentioned cruise lines earlier. This is Norwegian. doing something similar. It's pulling back up. It just needs to settle in there for a bit and then see if it's got, up to $20, $21, $22 as well. Now, again, does it have shrinking retracements? You could argue that. So that is a possibility in this particular case. So just be careful of that. Nike, I kind of liked that one last week as a recovery stock. And again, it's done well. So these recovery stocks that I've pulled out from last week have been pretty good. There's a few percent in there for that. And, options are reasonably priced as well, which is good. Now, NVIDIA, obviously, getting the contract from from Amazon. I think it's in my notes. Let's just have a quick look at my notes in here. Where is it? Where is it? Where is it? Did I put it in there? Maybe not. Maybe I put it in somewhere. I think I put it in another area, which is a shame. But I could always do that. So I can just put in my note, add a note, and I go contract from AMZN. So I can do that, which is kind of cool. Save, and then you'll see it in your journal viewer. Contract from Amazon. Isn't that cool? It's very, very cool. So we can do that. We can play with that, and then we can edit it. But again, what I said earlier is that soon you can write your journal from the charts, click, 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 and then you'll see everything on the right-hand side, and we'll get rid of the icon on the left because you'll be able to edit it on the right. It's just a different component. Okay, so that's NVIDIA. Obviously, it's great, but this is where you want it if you can get it before it goes away at earnings. Up here is quite a long way away to chase it. Pfizer was looking good, but it's bumped its head on that 200 again. So we just have to wait until it maybe does it again. So leave that one alone for the time being. PGY is next. Pagay Technologies, kind of like it, so Pagay Technologies, whatever they do. I kind of like this action above the 50. It just needs to make its mind up which way it wants to go. But bear in mind, the implied vol is very high on this one, so you'd have to buy the stock, not the options. Planet Fitness, let's have a look at that. Looks pretty useful from this point of view, and this is what we have thought here. So it's pulled back. OBI is okay. There's some big money footprints in here. Looks like it wants to go in an upward direction. A consolidation would be good. Shrinking retracements as well. Maybe that, something like that is showing up. That's pretty good. Next is Palantir. That one looks pretty useful. Just one more bar of consolidation would be really handy. And I think also here you could argue shrinking retracements as well, bullish. PayPal. Now, you don't often hear me saying something nice about PayPal, and it's not that I'm saying something nice. However, regardless of what I think of them, this looks interesting. Up it goes with a little bit of volume, just consolidating. That could actually see some upside. Let's have a look at the year chart on that one. We could always go 3 years on it. But yeah, it's had a rough old time. And let's do the 3 year. Why not? You can go up to this one here, go 3 years. Let's just see what it's done over 3 years. There you go. So over the last 3 years, PayPal has gone from over 300 to around, well, whatever it is now, which is pretty nasty, isn't it, when you think about it? So really had a bad time, and I think deservedly so. I think they've run it badly. Next is, from a customer point of view at least, this one is Transocean. Let's just click on, sometimes you might have to click on that timer again. This one doesn't look good. Again, oil and gas had a bad week. So last week we thought it was going to be a good week for energy stocks, and it's actually been a terrible week for them. That looks like selling, and typically that would mean more downside. It didn't here though, so I'll leave that one alone. But obviously, energy stocks having a worse time this time and not looking particularly good. Even Sunrun had a bad Friday there, so it's really messy in there. It is a short squeeze. There is some OVI. It does have a full house of big money footprints there as well. But just wait and see. Just be patient on that one. Now, Starbucks we had been bullish on as well, and that was good too. So we've been bullish on Starbucks for quite some time. If we go back, way back, if we can say that, yeah, even back here to about the 11th of May, and that's been pretty good, and it's got every chance of busting through that too and going up through that too. Seagate looks pretty good, just consolidating, gets above here. That could be an interesting one too. It's saying shrinking retracements bearish on this one, so just have to see which ones it's taking in, but that's that. I think you could almost argue the other way as well, but that's what Seagate. I would say that's got more upside potential than downside. Stryker, this is a stock that dominates its sector. This is it here. There you go. And we talked about this one last week, and it is beginning to creep up already. So that's Stryker. Tex is next, T-E-X, Terex. This one looks more like selling, although the OVI is a little bit shy on that one. Shrinking retracements both ways, but that's the one I'd be looking at. Gets below 55, and I think we're on the way down. Tapestry looks like, let's have a look at it here. Looks like more up than anything else. So good OVI, consolidation. I quite like it. If it gets above this, I think there's some upside there. It's saying shrinking retracements bearish, probably based on that and one of these. So I think it's a case that the story isn't quite written on that one yet. Tesla, one of the big seven, holding in there, hanging in there as well, which I think is really interesting. So I won't go moving on that one yet, but it's hanging in there. Take-Two, we mentioned that one. I've got a bunch of traders who are into it after there, about 155. That's turned out to be pretty good as well. Look, we've mentioned that back on the 25th of May, which is right in here, just there. Pretty good. Uber. What about Uber? What do we think there? Well, it's a good pick up there. Just needs to consolidate for another bar or two. Maybe above that key level would be good. Waste management, not looking good. A sell-off bar here, and OVI could be definitely more helpful, but it goes below 200, and I think that one's got a chance of moving down, maybe even moving down the toilet, you could say. This is Walmart. I liked it, but I did say it looks a little bit on the overbought side above here. That's why I didn't want to mention it. And there's your reaction there, overbought, and then you've got that open high, close low. That should retrace some more. Then a couple of ETFs here. Energy sector. Well, it looked like it was going back up, but it showed us something different. This is consumer staples, looking kind of interesting. A couple of those we saw earlier. Then health and vitality, or healthcare stock, looking pretty good. Then you've got Exxon in the energy sector. Again, last week we said, look, this looks pretty good. That should follow through to the upside, and it didn't. But it's kind of hanging in there one way or another. That's just a volatile sector right now. Can't quite make up its mind. And then finally, Zimmer Bionet. We said bearish last week, and it has trickled down a little bit more bearish this week as well. So as you can see, that was a pretty, it's a pretty mixed bag of it. Not massive amounts of quality, and we've said that for the last 2 to 3 weeks now. Not amazing amounts of quality out there right now. And if you can discern that for yourself and see that, then you're making a lot of progress. As I said earlier, we will be doing a webinar very soon, and we'll look at we'll do, the J stuff. So again, if you have VIP, you can just type in J, and you'll see some of J's time poor criteria, and they were probably the best of the bunch today as well. But it's a great thing, and hope you remember what I showed you earlier, when you're going to be able to edit this, and then it pops out with the Trade Finder, which is pretty cool, and it's coming literally in a matter of about a couple of weeks. So I'm very excited by that, because then we can do them in our sessions as well. We'll show you how powerful and how cool and how quick this piece of kit is, where you can remain focused. And of course, the quicker you can do things, the more time you can spend on searching for quality, and you don't have to be saying, well, okay, can I compromise on quality? There is no excuse. You never want to compromise on quality. Only go with the quality ones. They're the ones that work the best. That's it for now. See you soon. Bye for now.